Okay, everyone, let's get started. Welcome to week 3. Tonight we'll talk about the sensitivity report. The business analytics modeling class is really one of my favorite classes. Do you know why? Is this your favorite class? Yes. I want to know. Tell me the truth. Yes, very good.
On the subject, it's you.
This class is very interesting because it teaches you how to make better decisions, right? How to become better business professionals, make better decisions, get more profits, reduce more cost for a company, right? Yeah. This is what we have been learning in the past few weeks. Before tonight's lecture, I want to have a quick review on what we have learned in the last lecture. I introduced 3 important concepts to everyone, right? Do you still remember the concepts?
Yes.
What is an objective variable?
The one which is to be analyzed about, or the one which is our objective to be measured to maximize.
Yes, the objective variable is the goal, is the final goal we want to reach, right? We want to reach the best goal we can based on the constraints we have, based on the objective function we have. Yeah. This is the definition of objective variable.
By means of calculation, you can create an independent variable.
Right,
You are for looking for different objective that you
right.
get an answer for.
Yes, very good. This is the next factor we need to look at. The decision variables, right? Yeah. What are the decision variables?
The one which influence the objective.
Right. When we reach the best outcome, we are influenced by a lot of factors, right? We call these influencing factors decision variables. Yeah. The next important concept is constraints. What is a constraint?
A limitation we have.
Very good. Yeah. We always have a limited amount of resources, right? We call the factor with limitations a constraint. A constraint. Very good. Very good. Optimization process is basically a process of allocating the resources to the influencing factors in order to reach the best outcomes for the final goals, right? This is the optimization analysis. We say we can build a function. What is the function called? Objective function, right? It is the mathematical relationship between the objective variable and the decision variables. Yes, very good. Very good. This is what we have learned in the last lecture. Now let's see a new example. Let's take a look at how we can use optimization analysis in the investment decision making. A financial analyst is helping his client, Dolly, right? Dolly, to make an investment plan. Currently, this client, Dolly, has a total of $750,000 in hand. This is the available amount for the investment. The financial analyst, Brian, suggested 6 bonds to this client. As you can see on this table, we got Acme Chemical Bond, Dynastar, Eagle Vision, Micromodeling, OptiPro, and Cyber Systems. These are the bonds available for the investment. Dolly told Brian that since you represent me, no matter which bonds you finally choose to invest, how much you plan to invest in each bond, I want to reach a goal. What is the goal? I want to get a maximum yearly return. On this table, you can see the bond name, the return rate, which is the interest rate for each bond, the years to maturity for each bond, and the risk rating. When you invest, you have to consider the risk factors, right? In practice, you usually get the rating from some agencies like Morningstar, Bloomberg, those financial organizations. Yeah. They have a look at the history performance of each bond or each stock and then give a risk rating. The smaller the rating is, the safer the investment will be. Yeah. It's just the estimation of the risk factor. This client also has some particular requirements. 3 requirements, right? No more than 25% of her money should be invested in any one bond. At least half of her money should be invested in long-term bonds that mature in 10 or more years. Yeah. We can find the years to maturity in the table, right? The third requirement is no more than 35% of her money should be invested in Dynastar, Eagle Vision, and OptiPro. These are the particular requirements. Now I want to give everybody about 10 minutes to work on this question on your own. And then I will demonstrate how to address this question by using the optimization analysis. When you get this analysis task, what should you do? We have to build the information table in the Excel file, right? Yeah. This one is different from the previous example. In this case, I didn't list the known information in an Excel file. What should you do when you get this analysis task? Should you scream in your office? No, don't do that. Don't panic. Just list the known information in the Excel file first. If you don't have any information in a blank Excel, list the known information in the Excel file. What are known? The investment, the table shows the investment options is known information. So we go to Excel file and then copy this table. And then let's go back to Excel and then paste this table into the Excel file, right? It doesn't matter where you paste this table. It's completely up to the analyst. So let's choose C4. Let's choose C4. You want to give some space on the top so you can add a title after your analysis. Yeah. Leave some space on the top, on the left side, on the right side. Yeah. And then paste this table. And then change the weight of change the font size first. Make it smaller. What we try to do is to make the table look nicer in the Excel file. Yeah. Rating, years to maturity, and the return rate. This is the current table we have, right? These are the known information. We have to list them in the Excel file. Yeah. Don't panic when you get a blank Excel. Yeah. Just list what you have known from the analysis task. Next, what we want to do is to find a cell to hold the objective variable. It's up to you to choose any cell. Let's choose C12. Let's choose C12. Type in total yearly return. This will be the objective variable, right? We want to calculate the objective variable in cell D12. D12. Before we move to the next step, let's figure out the objective variable, decision variables, and the objective function, right? Let's figure this out. Can anyone tell me what the objective variable is? You want to see the previous slide? The total, yes, very good. The total yearly return would be the objective variable, right? This client wants to get the maximum total yearly return. So we already know total yearly return will be the objective variable. My next question is, what are the decision variables?
The bonds.
We have to follow the business rules, right? We want to get the total yearly return. How can we calculate this number? Yes, in this table, we already know the interest rate for each bond, right? In order to calculate the total yearly return, we have to calculate the yearly return from each bond and then add those returns up. That will be the total yearly return. In order to calculate the return from each bond, we have to use the interest rate to multiply, yes, the amount of money invested in each bond, right? Yeah, very good. So finally, the question goes to how we invest, how we can allocate this 750,000 into different bonds in order to calculate the maximum total yearly return. As you can see on this slide, this would be the objective function. y hat represent the total yearly return. X1, X2 until X6 represent the amount of money invested in each bond. Yes, very good. We use the amount of money invested in each bond to multiply the interest rate to get the yearly return from each bond. Add them up, that will be the total yearly return. Yeah, very good. How can we implement this objective function in Excel? Remember, we have to implement the objective function in the cell that holds the objective variable value, which is D12, right? D12. In order to highlight the D12, you can change the background color. Change it to yellow. In the future, your data user will know, okay, this is for objective variable, this cell. And also, we need to create the cells that hold the decision variable values, right? Let's use cell G4. Let's type in amount invested. Amount invested. So in the G column, we will record the values for the decision variables. Yeah. Let's change the background color to make it nicer. Change it to light blue. And then we need to implement the objective function. In cell D12, let's type in equal sign. And then we use the return rate for Acme Chemical, which is in cell D5. Multiply in cell G5. The possible investment for Acme Chemical, right? And then plus cell D6, multiply G6, and so on and so forth.
We can use a product function for that.
Yes, very good. We can use a function. I will introduce a function very soon.
You have introduced in previous class.
Yes. This would be the objective function. We use each return rate to multiply the possible investment for each bond. Add this multiplication together, that would be the total yearly return. As Amran just said, we can use the shortcut, right? The shortcut is we can use a function called a sum product. Sum product. This function has two parameters. There are two ranges, right? For the first parameter, we select the return rate range. Select all the returning rate, and then a comma. For the second parameter, we select the range for the possible investment. Yes, very good. From G5 to G10. This is exactly what we just did. We use return rates to multiply the money we invested in each bond. Add those numbers together. Yeah. So now you can see, instead of typing all these equations together, we can use sum product, which is a very useful function. And then we use the closing parentheses to end this statement. Press enter. It's 0, right? Why is 0? Yeah, we haven't calculated how much we should invest in each bond. So the total should be a 0. Next, we need to look at which factor?
Yes.
The constraints. Yes, we need to list all the constraints. Besides what the client explicitly tell you, no more than half of the money should be invested in what kind of bonds, we have to consider the implicit constraints. Some classmates have some question about the implicit constraints. Implicit constraint means the client, your data user, do not tell you this is a constraint because the constraint is a common sense. What are the common sense in this case? Very good. Very good. Yes. The client doesn't tell you how much in total you should invest. However, this client only has 750,000 in total. So no matter how much money you should invest in different stocks, the total investment cannot exceed 750,000. This is the common sense, right? The client doesn't tell you. However, you have to consider it when you build the solver function. What are the constraints, implicit constraints we have to consider? It's an investment. So no matter how much money we should invest, the investment cannot be negative, right? Yeah. So don't forget these two implicit constraints. Right? Let's find some cells to list the constraints. Let's use cell J4. Type in constraints. This is the label. We'll list all the constraints. In cell K4, let's type in calculation. In case we need to calculate total investment in certain stocks, certain bonds. In cell L4, let's type in capacity. This would be the limit for each constraint, right? As I said, no matter how much money you should invest, the total investment cannot exceed 750,000. So the capacity of total investment is 750,000. How can we calculate the total value of the real investment? We need to add this number up, right? From G5, G6, G7 to G10. We need to add them up, right? Yeah. So in the constraint calculation, in cell K5, let's type in equal sign. And then SUM, the sum function. And then select this range. What we are calculating is the total value of the real investment, right? Yes. It's 0 because we don't know yet, right? We want the solver function to tell us. For this constraint, we want to name it as constraint 1. Constraint 1. Next, let's build constraint 2. Constraint 2. Let's think about the second implicit constraint. No matter how we invest, the investment cannot be negative. So in cell L6, let's type in cannot be negative. We have to remember this, right? Yeah. This is the second implicit constraint. Next, let's take a look at some explicit constraints. What does the client actually tell you? First, no more than 25% of her money should be invested in any one bond. Any one bond. Which means the values, no matter what the value will be in the future, the values in the G range cannot exceed 25% of 750,000, right? For the third constraint, we know the capacity should be 25% of the total investment. So in cell L7, let's type in equal sign, and then type in 0.25 multiply cell L5. Are we on the same page? Very good. Press enter. This is the capacity for the first explicit constraint, what the customer really tells you. Next, at least half of her money should be invested in long-term bonds that mature in 10 or more years. Let's go back to here. Let's build the second explicit constraint. Constraint number 4. At least half of the money, right? In cell L8, let's type in equal sign. And then click. Then type in 0.5 multiply cell L5. This is a lower limit of the fourth constraint, right? At least, so more than this number. The last constraint. Constraint number 5. No more than 35% of her money should be invested in Dynastar, Eagle-Vision, and OptiPro. Dynastar, which is in cell G6, Eagle-Vision, which is in cell G7, and OptiPro, which is in cell G9. The total of these 3 bonds investment cannot exceed 35% of her money. For the last constraint, in cell L9, let's type in equal sign, and then 0.35 multiply cell L5. Press enter. This is the upper limit for the last constraint. We also need to calculate the values for constraint number 4 and 5, right? In constraint number 4, type in equal sign. In K8, type in equal sign. The investment, at least half of the investment, should be given to the bonds that mature at least 10 years. Yeah. So let's find out which bonds matures in 10 years. At least 10 years. First one, Acme Chemical, 11 years, right? So click G5, and then type in plus sign, and then Dynastar, G6, plus sign, and then micromodeling, 10 years, right? So click on G8, multiply 13 years, cyber system 13 years. Click on G10, press enter. For the last constraint, we cannot invest more than 35% into Dynastar, Eagle-Vision, and OptiPro. In cell K9, let's type in equal sign. Dynastar plus Eagle-Vision plus OptiPro. Press enter. Are we ready for the optimization analysis? Yes, right? Yeah, very good. Click on data on the top. And then on the right end, click solver. Click solver. We need to set up this function, right? First, we need to find the objective variable. Click the button on the right, and then find the cell D12. This will be the objective variable. And then we want to maximize it, right? So choose max. For decision variables, we have to choose cell G5 to G10. G5 to G10. And then check the box, make unconstrained variable non-negative. Yeah. This means no investment should be negative number, right? No matter how you invest. let's add these constraints into the box. Click the Add button. First, no matter how you invest, the total value of real investment cannot exceed 750. On the left side, click cell K5. In the middle, choose less than or equal to. On the right, click L5. And then click OK. This is constraint 1, right? Constraint 2. No investment should be negative. Since we checked the box, make unconstrained variable non-negative, this one we already take care of, right? Yeah. Constraint 3. No investment should be more than $187,500, right? Yeah. Click Add. And then select the range from G5 to G10. Less than or equal to, click the right-hand box, and then click cell L7. Then click OK. This is constraint number 3. Constraint number 4, at least $375,000 investment in the bonds that mature at least 10 years. Click Add, and then click cell K8. In the middle, choose greater than or equal to. In the right-hand box, click on cell L8, and then click OK. Constraint number 4, right? Constraint number 5, click Add. This number should be less than or equal to L9. Click OK. In the solving method box, choose simplex LP, linear programming. Since we look at a linear relationship, we need to choose simplex LP. Yeah. And then click solve. Solve. This is where the magics happen. Yeah. Tonight, I want you to click on 2 reports. First, click Answer. Second, click Sensitivity. Select these 2 reports, very important reports. And then click OK. Let's have an overview about the final analysis, right? What could be the maximum yearly return based on your constraints, based on the objective function? Very good. Yeah, you can see the number. In order to reach this maximum goal, the range in the G column shows everybody how much we should invest in each bond. Yeah. Next to sheet 1, you should be able to see answer report and sensitivity report, right? 2 new reports. Let's talk about them one by one. Answer report. Answer report is basically a summary of your analysis. It has 3 sections. First, what is the final value of your objective variable? Let me scroll down for the online students. $68,888. This is the maximum yearly return based on the constraints, based on the objective variable, objective function. Why I keep saying objective variable? The second section is the summary of values for your decision variables. In order to reach the $68,888, how much we should invest in different stocks, in different bonds. For instance, for the first bond, we should invest $112,500, right? And so on and so forth. For bond number 5, we don't invest any, right? Yeah. The third section shows everybody a very important information: the status of your constraint variables. Status of your constraint variables. For each constraint, it shows a status. In the status cell, you can only have 2 possible values, either binding or not binding. If your constraint reaches a binding status, that means what? That means you have used all resources for this factor. You have nothing left. If your constraint shows not binding, that means for that constraint, you still have some resources left for you to use. So remember this. From the status, you can say which constraint variable has reached the bottleneck. Yeah. Cannot go through, right? Reached the capacity limit. If the constraint shows binding, you have used all available resources for that constraint. If it shows not binding, you still have resources left. Next to status, you get the slack cell. Slack cell. Since for constraint 1, we have a binding status, and the value for the slack cell is 0. What does the slack cell show to everybody? How many resources you still left for that constraint? If you see this constraint shows binding status, the slack value for this constraint should be 0. Yeah, nothing left. For the second constraint, the status is not binding. What does this mean? Very good, yes. You still have some money left, right? Yeah, what is the second constraint? At least half of the money should be invested in the stocks or bonds that mature in 10 or more years. Yeah, at least. It's not less than or equal to. At least, right? Yeah, at least. So currently, for this constraint, you invested $562,500. What is the space for you to invest more?
187.
You use $750,000 minus the current investment, right? This is the space you can still grow. Yes. For the third constraint, it shows binding. What does this mean? Very good. Yeah, very good. You use all resources for the third constraint variable. Yeah. Nothing left for this constraint. What is the third constraint? Constraint number 5, calculation. Let's go back to the data sheet. Constraint number 5. No more than 35% of her money can be invested in Dynastar, Eagle Vision, and OptiPro. Yeah. This is the capacity, right? This is the limit. No more than this much money can be invested in these 3 bonds. You already reached the limit. Nothing left. So the slack value for this constraint variable should be 0. Very good. Very good. Now you have a better understanding about the optimization analysis, right? Now we want to go even deeper. Let's take a look at the sensitivity report. The sensitivity report shows the answers to the manager's what if questions. What if questions. The client could say, okay, Brian, you already showed me how much I should invest in different bonds, right? But what if now I have a little bit more money? I give you $750,000 already, right? What if now I can give you $1 more? What would you suggest me to invest? We can find the answers from the sensitivity report. Yeah. Let's take a look at this report. Click sensitivity report. Click this report. Let's go to the bottom of this report. Let's go to the constraint section. Constraint section. In this section, you can see the current values for each constraint variable. For instance, for the first constraint, $750,000, right? Yeah, first constraint. What is the first constraint in our case? Constraint 1.
The total amount should be.
Yeah, very good. Total value of the real investment cannot exceed 750,000, right? Currently, the total value of the real investment is 750,000. That means we already used all available money to make the investment in order to reach the maximum yearly return, right? Yeah. As you can see in the sensitivity report, you got the same answer. Yeah. The value for the first constraint is 750,000 already. Next to it, we have something interesting. It's called a shadow price. Shadow price. What does this mean? It shows how much the objective variable will increase or decrease if you increase or decrease the available resources for this constraint. Let me repeat. It shows how much the objective variable will increase or decrease if you increase or decrease the available resources for this constraint variable. Let me use the first constraint as an example to explain to you. So now the client said, I have 750,000 in hand, right? You invest every penny of it. Now I want to increase the investment by $1. I give you $1 more. How much my yearly return will change?
0.08.
Very good. Yes. Because as you can see in the shadow price, the first shadow price, it's a positive number, right? It is 0.09. 0.09. Yeah, I rounded the number to 0.09. This means if you have $1 more available for the investment, the objective variable, which is the total yearly return, will increase by $0.09. Yeah. This answers the client's what if question. If I give you $1 more, how much more you can give me as a return? What about the shadow price for constraint number 5? 0.009, right? Very small number. Very small number. What does this mean? What is constraint number 5? The total value of real investment in 3 bonds cannot exceed 35% of the client's money, right? Yeah, cannot exceed. We already reached the limit. Yeah. So now we need to look at if we can bring more money for this constraint. Yeah. If we have $1 more, we give this constraint, we address this constraint. How much more money we can bring as a return?
0.009.
Very good. $0.009. Very small return, right? Yeah. I have a question for everyone, the future managers. What does this mean to you?
As it was last.
It's worth taking further investment.
What does it mean as in for the last constraint?
What does the constraint report mean to you? These 3 constraints mean to you?
How much more return will I get depending upon, as in with the amount of amount which I have, as in if my judgment is right, if the calculation makes sense. How
Very
much
good.
more would be the return?
Very good thought. Very good thought. I want to give everybody some hints. You don't have to answer this question right away. I want to give you some hints, and then you think about it. I will give you about 2 or 3 minutes. You think about it, and then you answer this question. If I invest $1 more into constraint 1, which is the total value of a real investment. Now instead of 750,000, I have a $750,001 now. If I bring one more dollar into this constraint, I can get $0.09 as the extra return, right? Yeah, the marginal return. If I give this $1 to address constraint number 5, I can bring only $0.009. Let's take a look at the question. No more than 35% of her money should be invested in these 3 stocks, 3 bonds, right? Let's go back to the data sheet. Let's take a look at the key feature of these 3 bonds. Why the client doesn't want the financial analyst to invest in Dynastar, Eagle Vision, and OptiPro? There is a reason why I click on ratings. Yeah.
Because it's
Let me maximize it.
Because it has
Dynastar, Eagle Vision, OptiPro. We don't want to invest more than 35%. Why?
high risk.
Very good, yes. If you look at the rating report, these 3 bonds have a very low rating compared to other options, right? Other options. This means they are relatively riskier than other options. But the shadow price for constraint number 5 is smaller than the shadow price for constraint number 1.
Yes.
Yeah. That means what?
The risk is
That means in the bond investment, in this case, do not pursue riskier bonds. Yes, do not pursue that. Let's take about a 10 minutes break. When we come back, I want to give you an exercise to do. Yeah, I want you to try out.